What is absorption and variable costing, particularly for inventory? Well, to start with, companies value their work in progress materials and their inventory. Okay, now these two concepts are relevant to companies that need to expense their cost of goods produced. Okay, so absorption costing first, as the name implies, the costs are absorbed into the output of the production process. So first off, this is for external reporting. It is required by GAAP. So all of your financial statements, you're going to have absorption costing. And what it does is all the direct costs that go into producing a good are attributed to cost of goods sold on the financial statements. Okay, so that's all direct costs. Now, overhead or indirect costs can still be expensed in different ways. But once again, all the direct costs attributed to the cost of goods sold. Okay, variable cost, on the other hand, which can be used for managerial accounting, only variable costs are included in the cost of goods sold. Okay, so the variable cost expense, there you go. It's an expense for cost of goods sold. Once the good is, again, once those expenses are integrated into the good and it's sold. Okay, fixed direct costs and any indirect costs, such as overhead, are expensed as operating expense, not cost of goods sold. So that's a major difference there. Now, why does that matter so much? Well, what's the effect when you read the financial statements? Absorption costing by its very nature, because you're putting all of those costs into the cost of goods sold, you're going to end up with lower margin on the product because the costs are baked into the cost of goods sold. If the cost of goods sold is higher, it means you have a lower margin. And that means you would have to sell more product to hit break even. Where if you were to just include the variable costs in there, you would reach break even at a much lower sales point. So that's the general difference in how these two are used: absorption and variable costing.